What's happening in the market? Are you an investor, a 401k investor who is looking to better understand exactly what's going on today and make better decisions in your portfolio? That's really why we created this 27 T-charted series. We're going to cover 3 charts that I think are very important to understand here in the month of July 2026 to help you make better investment decisions. There's a lot that happens in the media and in the news that can create uncertainty around what you should be doing. What I want to do here with this charted series is simplify that for you, provide 3 visuals that will allow you to feel more confident as you make those decisions to better your financial future. So let's jump in. First chart, AI. Who at this point isn't necessarily getting sick of hearing about AI, but I think that this chart is a powerful visual representation of why this is important to you as an investor. And really what we're showing is business spending on computers and data center hardware. This is the hard costs that are associated with the AI build out. And you can see this dramatic shift, not just from 1990, but really from 2023 to today, rising from just under 50 billion in 1990 in spending to over $384 billion in spending on this hardware for the AI build out. Why is this important for you? As an investor, especially a 401k investor with a long time horizon, this is imperative to the health of the overall economy today. What I mean by that is this hard dollar spending that's going into the AI build out is going to eventually funnel through the economy, not just to the businesses that are actually building out the data centers and putting all of the work into the physical build out, but also eventually the efficiency that comes from utilizing AI. And we're already seeing some businesses be able to use this to impactfully change their business. And when you're doing it at a large scale, like with the companies you're investing in, there's a real positive benefit that's going to show up in the form of returns in your portfolio. Moving to the next chart, and not only are we talking about heavy spending that is helping drive the economy today, but overall companies are performing very well. And what we're showing you here in chart 2 is in the gold line, you've got the S&P 500 total return, and the green line is the 12-month forward earnings growth. What is forward earnings growth? That's what companies are actually making as a result of the business that they do. And what we see is that stock prices and earnings growth is tied at the hip. As a investor, if you're looking at returns, right, you're trying to maximize your portfolio, but you want to be invested in companies that are performing well. It seems very simple, but sometimes investment understanding is simpler than what it's made out to be, right? It's usually these complicated conversations that can go over even the most seasoned investor's head when it comes to, company is doing well because of X, Y, or Z. In reality, what we want to show you is that businesses are doing well, and because businesses are doing well, we expect the market to continue to reflect that moving forward. So again, this chart in and of itself is talking about how stock prices and earnings are tied to the hip. And because earnings are doing well, I think that bodes well for what the stock market can do here over the next 12 to 18 months. The last chart we want to cover is volatility and returns when a new Fed chair is named. And what we have is looking at the forward 1-year returns from when a Fed chair is actually sworn in to 12 months after, and what that return profile looks like. Really what that means if you invested $1 in the S&P 500, what your actual physical dollars would look like, and what was the volatility that came along with it? So that gold bar is the actual return for each Fed chairman going all the way back to Arthur Burns, which was in the 1970s. He was appointed in 1970, all the way to today with Kevin Warsh. Granted, this data is looking at 7/1, July 1st, so not a ton of information that you can gather from his specific start to the Fed. But what we want to show you is that overall, the Fed chair changing, if you have a good feeling, a bad feeling about these Fed chairs, it's really up to the market. It's not up to the Fed chair. You see some pretty significant volatility. Just about every new Fed chair in their first year had either a pretty decent correction or a true bear market. Looking at bear markets from Arthur Burns, Alan Greenspan, and Jerome Powell came very close to a bear market, or sharp corrections with William Miller, Paul Volcker, and we're still to see what will happen with Kevin Warsh. But as an investor, I want to be clear that though the Fed is an important component of the overall economy, driving interest rates and really impacting things that touch your personal life as an individual investor on a more regular basis, the Fed chair themselves are not going to be drivers of return, either positive or negative. And I think that personally, I believe the Fed chair position has been romanticized to a certain extent that does not represent what actually impacts the market and your investments. So when you're thinking about, should I be doing something because of the Fed chair change, my answer is a very short no. Don't make investment decisions based on the Fed chair. Make investment decisions based on what we were talking about before. There's strong spending and there are really positive earnings that are happening today in the economy. I think it's a very important component to pay attention to, but at the end of the day, what businesses are doing is more important than what the Fed is doing. So I want to make sure that everybody has a good understanding of what's happening in the market. What are the 3 things that I'm paying attention to right now and how that can impact your investments? So make sure if this is something that is helpful to you, we do this every single month. So subscribe to the YouTube channel. We also, if you are a employee of a company that 27T manages the 401k or retirement plan for, you'll continue to receive the newsletter and we'll have access to this YouTube channel moving forward. Thank you for joining me on this conversation, and I look forward to seeing you next month.